For more on today's big retail earnings, let's bring in former Walmart U.S. CEO Bill Simon. He also sits in the Darden Restaurants board. Bill, always great to get your take on all things retail. How do you read these warnings about the consumer?
Well, yeah, good afternoon. Interesting day, really. And I thought your point that you just made about wage increases that Home Depot was talking about is really telling. If you sort of look at Home Depot's report and Walmart's report, you see food inflation really high and companies having to respond by pushing more wages in. And those two pressures, inflation and wage increases, offset the tight money policy that the Fed's putting in place. And on we go. Inflation, wage increase, inflation, wage increase.
I want to, talk to you generally about retail, but I want to get your Walmart-specific take, Bill. And I'm wondering if you think Walmart was sandbagging with this full-year forecast, if they're just being overly conservative.
They tend to do that, and so it would be my guess that they're probably going to do better than that. They tend to underpromise and overdeliver. I think the thing, especially on the top line, I think the top line, because of the inflationary pressures on their food business, will grow. I think they've been struggling and have been for quite a while, and not operating income, and I think that might be a little more challenging to them. But I think they'll grow, and I think they'll beat the numbers they put out.
Bill, Target's had a couple disasters over the last year, more than a couple, probably a few. How important a quarter is it for them just to sort of explain and to talk through the problems they've had on the inventory side of the ledger for almost a year now?
Yeah, that's what I'm really anxious to see. Brian Cornell has a pretty good team over there, but they've been really struggling. They don't have the velocity and the traffic that's driven, by that really big food business that Walmart has. So clearing out the inventory for them, it's going to take more time, and it's probably going to take a little bit more money. So I'm curious to see how well they did there. It's a challenge.
Bill, seeing what rates are doing right now in terms of thinking about how consumers are dealing with higher debt burdens, for instance, inflation pressures in general that they have to deal with in daily life. If you had your druthers, would you be investing at all in retail these days? And I guess that's my way of asking you how bad you think the consumer will get in the short term.
I think the consumer's resilient. They always have been. Okay. They always find a way to get what they need and what they want. It just doesn't always look the way that us retailers think it should look. And the one who figures it out and gives it to them wins. And right now, I think Walmart's doing that with their food business. Amazon's kind of struggling there. They haven't quite figured it out. The world's changed, and they haven't been able to change quickly enough. But somebody will figure it out, and good investors can figure out which companies are going to do that.
Bill, it's Karen. Let me ask you something about Target. So just thinking about their mix versus Walmart's mix, obviously Walmart very food heavy, but they did talk a little bit about apparel and some of the other things that are a little higher margin being better. Do you think that could lift Target's results?
It could help. I mean, Target has a better, I think, apparel portfolio than Walmart. So if Walmart showed a little bit of resilience, I think there's some hope for Target. That'd be one of the things that I'll be looking for on Target's release. Target also does really well in health and wellness, and Walmart reported some pretty decent numbers there, too. So maybe those two things will offset some of the hard lines shortfalls that they have. The real challenge for Target's going to be, what does their inventory look like? If they can't liquidate what they had, like Walmart did, it's going to be difficult for them.
I want to put aside Walmart and Target for a minute, Bill, and I'm wondering if there is another retail position that you have in your portfolio that you like right now.
Yeah, I'm probably on the retail sidelines until the smoke clears here myself.
Ah. Okay, so that was the answer to my question before, Bill. You're playing coy. You're on the retail sidelines. But, of course, you're in Walmart stock, I assume.
I'm not.
You're not?
Nope.
Okay. Well, how long have you been out of Walmart?
I've been in and out, but mostly out over the last 4 or 5 years. It's one of those things where, I have a lot of confidence in the company, and the management team there is terrific, and they always do seem to find a way to grow and evolve. But when you're so personally and emotionally attached to something, I tend to not invest in it. So I like them, and I care too much, so I don't tend to put a lot of money there.
Sounds like a good investing strategy. Bill, always great to see you. Thank you.
You bet.
Bill Simon. He's on the sidelines in retail.
You know, there's a few names, and I think it was Tim who'd been a longtime shareholder in Nike and Starbucks, and we were talking about some of the moves that those stocks had over the last few months, and I just thought they were kind of interesting, especially when you consider the valuations that some of those things were trading at. And I feel like, you know, again, this goes back to your question about were those, you know, Home Depot was obviously Home Depot specific. I think Walmart traded well, but the whole retail space traded really weak today. I just feel like the ones that are expensive, the ones that ran ahead of the rally in general, I think they're vulnerable here. And you know, again, especially, you know, the market will start discounting what's going to happen in Q2 and Q3 pretty soon. And maybe today was the start of it. I don't think you have to put your finger on today, but those two reports, and I think the guidance in particular, they kind of give cover to smaller retailers to do the same going forward.
Yeah, and I don't think you necessarily can extrapolate this to everybody out there. I mean, there have already been retailers just this earnings season that have proven resilience. And I think some of this does come down to their brand strength, because the consumer is becoming harder and harder to win over right now. So people have money, but they are being very strategic on where they're spending it right now. So yes, maybe I have to buy more groceries and less electronics, and that's where Walmart's going to benefit you. But I don't necessarily think this is bad for retail as a whole. I think this is going to continue to be company specific.
TJX before the bell tomorrow was made an all-time high a week or so ago. Traded off today makes sense. Trading it at 23 multiple, that's going to be I think that's a huge tell as to really what's going on in the consumer space. This should be a perfect environment for them. We'll know a lot more in 24 hours.